What up, everybody? Welcome to another week here at BTSMC. It is Sunday, December 15th. What I'm going to do in the first half of class is take you through last week. Last week was a sniper week. We either were sniping it up and down. It was very eventful, and members was making money. I'm making money. It was really a solid week altogether. And I want to pull out gems from last week because it's easy to move on, but I think it's important to go through every week of price action and pull every gem out so you're better for the upcoming week. So first half of class is last week, second half of class is what's happening this upcoming week. So obviously you see a bunch of markups on my screen and it's really confusing, and don't worry about it. I'm gonna talk about all of it as we go through this exercise. But this is what last week looked like at the end of the week. Actually, last class when we were here, this is what it looked like as I did the watch list. I was like, hey, these are my expectations. This is Friday's candle, and let's talk about Monday. So one thing we were looking at is the fact that Nasdaq had a rally coming out of nowhere, right? Like, because we were pretty, I wouldn't even say out of nowhere because it's something we called out once again, but more so it's been a pretty choppy move up. Then it ran, then it came down deeply. And then if you guys remember in this class, Sunday open on this green candle right here, as soon as the candle opened, we were live in this class, and I was like, yeah, Nasdaq's gonna make its way back to all-time highs, but it's gonna be an ugly journey. And so you see it was a really ugly journey at first, and then we started to like really break out to the upside. So now we were focused on some upside targets, and if you guys can see, this is all-time highs, right? We've never ever been this high in Nasdaq's history before. And so it's really hard for a lot of people to find targets up there. But I gave one target last week. I said I see Nasdaq heading to 21,819.75, and I had everybody write that down last week. If you remember in class, I said make sure you have this on your charts, 21,819.75. So that's kind of the premise headed into the week. Now let's go into the 4 hour and kind of see what we were looking at here. So on the 4 hour, what we were looking at is if we were to go higher immediately. One, I told you guys, I don't really want price coming back into this 4 hour fair value gap. There was no need for that. And if it does go into that, yes, it could technically use it, but I wouldn't be a fan of it. I can kind of see it going lower than that. So that was last week's instructions. This is still a target on the upside. We're still bullish. It just doesn't necessarily have to go immediately. It could come down first, or it could go even lower than this technically and come back up. But my point is, Nasdaq had an objective to get up here for sure. And I talked to you guys about objectives a lot. Price is always on a mission. There's always an objective behind price action. It's never just random and like, no, there's an objective at all times. So this is the buy side, meaning the upside objective heading to this level. That's why I had it as first target there. All right, so boom. We're gonna go to Tuesday really, but if you can see Monday, it was chopping at first, and then we started to like break down. And what can we say about Monday? I just want to make sure there's nothing I want to really say about Monday. I mean, like on Monday, you guys can see, for example, that here's what I didn't like, by the way, and why I said I don't want price coming back to this 4 hour BTC. So I'm on the 1 hour time frame. I want everybody to be focused. I'm on the 1 hour time frame right now, but this is where the 4 hour BTC was. Okay, this is where it was, this same location. And I told you guys, I don't really want price going there. If we want to go higher, I would need price to kind of stay on the bullish side. Don't come back into this area. And why did I say that? It's because of this red wick. What is the importance of this red wick? I need you to notice the fact that this red wick came down and it already, what we call, mitigated this fair value gap. It already used it to create higher prices and create a new swing high in the market. So coming back to that same fair value gap and expecting another bounce is like Tiffany said in the chat, exactly, it tapped into that fair value gap. So it already did what it had to do. So expecting it to be used twice is like, hey, it happens, don't get me wrong, but it's not something I'm a fan of or nothing I want to really necessarily put money behind. I would need real confirmation to get in. And as you see, it came back to it, kind of teetered around for a second, then it dropped off. Like, all right, so now, what did I say at that time? I said, price is coming back to this area to go higher. This is where we want to take buys at. There was one more place I was looking at for potential buys, and it was this fair value up down here. Why was that? So I gave you guys two areas for bounces. It's either the one we bounced on or this fair value gap. Why did I say that? The only reason I said that is because of the nature of the uptrend so far. If you guys can see, the uptrend on Nasdaq so far has been like, we go up, we have a deep pullback, we go up, kind of a deep pullback, go up, deep pullback, go up, very deep pullback, right? So we went up again, and that's why I was thinking, hey, if we're gonna pull back, it might come to just this fair value gap before going higher. So that was my analysis there, why I had the bottom fair value gap as a potential bounce spot. My fault, I meant to say this one as a potential bounce spot, just because of the nature of the move so far. But in an uptrend, I really would expect this one, and so it did play out, and that was good. Now, what did I tell my mentees? I know the free community, I gave you guys this range, this red area. My free community, my fault, my mentees, excuse me. My mentees, the instructions I gave them was the lower half of this fair value gap. That was where I wanted bounces at. So, we ended up bouncing right here, right in the lower half of it. But both free community and mentorship community, y'all all got the same area ultimately. I told them lower half of this. I told you guys, I just gave you guys levels. I was like, hey, between 382 and 282 or something like that. I give you like an 100-point range, basically. But yeah, my real expectation was exactly where it bounced at. So that was good. Now, that's the background information. Now let's head into Tuesday's price action. Tuesday's PA. So let's move past Monday. Let's get to like New York Open. Hold on, my thing is messing up. Let's go. Did this earlier. Trading view just glitched sometimes a little bit, but we're gonna push through it. I just hope it's not my connection. I don't know if I said it for the YouTube, but I was having connection issues prior to this, so hopefully it holds up today. All right, so let's get it. Cool. You want with the hourly? I'm trying to go to Tuesday at 9 a.m. Let's get there. All right, so what I want you to notice is, I probably went too fast, right? That's okay. What I want you guys to notice is, hold on. The fact that we're engineering liquidity here. What do I mean by engineering liquidity? I've spoken about that topic many times, but this is like what a lot of people call a support level. And so everybody right here is, every time NASDAQ bounces on the same general area, everybody sees that as what? Support. That's what we all learn when we get into trading. And then you realize eventually that those support levels create some of the best opportunities when they're broken. What I mean by that is, typically when we destroy a support level, we go through that thing pretty aggressively, right? They're not really gentle with it. And so what we really end up doing is trying to take those moves, learning when it's time to break support. And one way to know it's time to break support a lot is really to look at fair value gaps heading into your quote unquote support area. So if you see something as a support level, I know there's a lot of like retail traders in here. Not everybody trades like smart money concepts, but if you trade support and resistance, a good way to know your support might get shattered this time is if you see like the order flow heading into the area being very bearish, meaning you see like fair value heading into the area. So something I was looking at as price heads into the same area, bouncing a few times, like you see it's been staggering in. So I wasn't really a fan of it breaking it if it looked like this. So this pop up, this pop up made sense before having to come back down, because they want to bait people bullish before they come in and smash that area. All right, so these relatively equal lows here were like, there was almost no way it was going to just be left alone in the market. Like, to me, I was like, this is way too clean. So here's what I want you to notice about those lows and why I say, to me, it was definitely going to be taken. There's two things. One, when I look at this low right here, this wick, to the left of it, it's not like it tapped into an inefficiency such as a fair value gap. So it's already suspect to me. This low is sus. So I'm giving out a small gem with that. You got to look at what that swing low is in conjunction with, basically. All right, so this swing low here is like, I look to the left, I don't like what it tapped into. That's liquidity to me. But now, here's what I want you to notice. Again, number two, these lows, and these lows, none of them were lower than this low. So that means that anybody who got in at the bottom is protected and they feel really safe. And I'm gonna just let y'all know right now, the market makers are just not that nice. I mean, they're not nice people. So I know you think they just gonna let you stay protected in a market like that, but no, it's not gonna last long. So they're basically like baiting people to think that that level is gonna hold, and you see how they play around that level so often, and then we'll see eventually they're gonna take it. But the only how that if we were really supposed to stay bullish off of this level, this fair value gap up here would have held. This one right here. This would have held and we would have went to the yellow line immediately. So this is what would have happened if it was meant for us to be bullish right now. It would have went like that. It would have gone like that. So seeing that price ended up coming down with, like, you know, a strong move down too, I'm like, okay, so they're gonna have to take out these people first before making that move to the upside. So that's some of the analysis I was using last week. Now, last week, I put out analysis in the morning at 9:29 a.m. Right? I said, and it's in the free community and in my mentorship community, both. I said, I'm looking for price to sweep Monday's highs first before going lower into this area. All right, so that was the plan. So let's head into that price action now. All right, so this is 8:55. This thing keep doing this. I think this is a connection issue, by the way. That's why I might have to keep resetting the replay thing, but hold up. Yeah, you remember that because I had put it in both communities exactly. So this is 8:55. Let's keep it going. All right. So you see, like, kind of headed into market open now. Like we had a little bit of a drop around the 8:30 area, and then it starts picking up heading into 9 o'clock. So like it's very easy to like be bullish right now. You know what I mean? Like especially after this rally, think about it. Especially if you trade support and resistance. I want y'all to see how you have this low right here, this low, this low, this low, this low. We base out and we consolidate for so long and we start popping out really strong. And even this mini drop, it got bought right back up. So man, I can see why people would be bullish at this time. I'm not saying you can't play some of this upside move. I'm gonna show you how I play the upside move, but still, it's like you have to keep your mind on what is the higher time frame telling you. And that's why I started off this class so far with the daily time frame, and I showed you the 4 hour, and I showed you the 1 hour. So now on the 5 minute, when I'm seeing this strong uptrend, am I forgetting everything about the higher time frame? No, you got to know where you are in the market and what's expected. So yes, how do you even get to the yellow line in the first place? You have to be bullish first to get there, but eventually you have to remember what the higher time frame is telling you is supposed to happen today. We're supposed to go bearish today. Understand? So that's why it's important to do a top-down analysis. I think a lot of people just kind of hop on the chart, get on the 5 minute and start taking trades, get on the 1 minute and start taking trades. Like you're gonna be lost. You're gonna fall in love with upside when we're actually bearish for real. This is just a retracement. All right, so this is 920, 925. All right. So notice I marked out a 5 minute BISI. My bad. Let me show you that. I marked out this 5 minute BISI, meaning it's a 5 minute fair value gap. That's something that could take us back to the upside. If this got invalidated, then I may actually start to get. I'll probably start thinking like, okay, maybe the drop is happening right now. Even though I wanted them to sweep the yellow line, meaning by sweep I mean to come above it, not stay above it too long, and then find its way back to the downside. That's what I wanted to see as I put that analysis out. But you know, this is important for upside. So when the market opens here, this is at 929. Look at 930. 930 comes down first. All right. When we got into this 5 minute BISI, I say, you know what? I'm trusting that this is gonna work out. And so I get in my trade and I take it to the upside. Now let's see that trade really. So this is where I got in. I was on micros. I was doing one of my funders. I had just recently started this 50K funded. So by the way, as a side note, like if you're just starting a funded, like if it's a new funded account and you start going in with like heavy sizing and stuff like that, that's kind of, I think that's irresponsible, and I think that's oversizing. I think it's best to start light on your like fundeds. I understand evals, sometimes you guys may even take heavier positions, but once you actually get that account funded, if you hop into it and you taking 3 minis and stuff, and to start with, I just think is the worst way to start your account. But this is actually literally my first trade on this account. Um, so and yeah, this class is recorded, correct? All right, so I hopped in here at 5:12:75. Y'all see the entry, 5 minute busy. This is the exact play. This is just me viewing it on a 15-second time frame. I'm actually gonna take us to the 15-second right quick. And so I got in, inside of this area, and then we taking it to the upside. And so there's a lot of noise that's going on. You can see how it could get a little bit scary to hold, but in this time period, I've been focusing on invalidation of at least the 5 minute PD arrays before I consider myself to be invalidated. Because, even when price took off here, yes, it technically did come back into this red candle and it bounced. So you can use that as a continuation OB or change its day delivery, however you want to look at it. But we invalidated this busy right here. So that's not really good. I don't like to see that we invalidated that busy, but this time period has been kind of rangy. So for me, as long as we were holding this 5 minute fair value gap, I was good. Especially because I knew that the fact that we bounced here anyways already tells me all I need to know about coming into this yellow line. So let's see how that plays out a little bit more. See, it's ranging, right? You can see how it can make you a little nervous, like, oh, we got to the previous highs. Now let me tell you about this. If we just got to the previous highs and we come down and we sweep it, and we come down with this red fair value gap, the fact that we came back into that red fair value gap right there already told me we're still going higher. So take what you want from that information. The fact that we came back into that fair value gap right there already told me we're going higher. All right. So, anyways, that's something that helped me hold my trade. I'm like, oh, we came back to that. I'm good. I'm good. And so, we pushing. Everything good. Everything's great actually. And so this trade is working out, right? This trade is there's really been no reason for me to sell this trade. Even when we got to the yellow line, by the way, to me, like there was no reason for me to sell the trade. I probably would have looked into selling it if we invalidated this whole fair value gap, though. Not gonna lie, because I wouldn't want us back into this range that we just left. But there was no reason for me to sell it, so everything is good. Play is working out, and then there comes the downside, right? So 576. This is the trade I took. I'm gonna break that down right here, but then I take this trade immediately after. So obviously I got into busy, and then yesterday eventually I took profits. I switched sides. All right, so let's see. Price starts basing out. Okay, so I got in with 576. So I got in around right here somewhere, right? Wherever it is, I got it around right here somewhere actually. Perfect. Why is that? Why is that? Well, hold on. It was right here, actually. My bad. Hold on. Trading view moving real fast. It was this one. Why did I get in here? Because if we're going to maintain this uptrend, right, you want to see bullish PD arrays holding. Bullish PD arrays holding. That's what an uptrend would consist of. Not just higher highs and higher lows. Yes, but what are those higher lows? Y'all missing that. Y'all missing that. I'm going to repeat that. In an uptrend, everybody teaches you about higher highs, higher lows. You need to pay attention to what are those higher lows being created off of. This higher low is created off of a bullish fair value gap and a discount of this 15-second price leg, taking it from just this low right here to this high. Okay, we went from a discount back into a premium. I know some of you might not know what I mean, but if I look at this as a price leg right here, all right, we came into the lower half of that price leg and we bounced back into the upper half of that price leg. If we're bullish for real, right, we need to clear these highs. So seeing that we failed those highs and then we came back into a discount with a strong red candle. See what I'm saying? That told me, oh, this might be a failure swing. Simultaneously, as you see in my screenshot, there was an SMT, meaning that ES did sweep those highs, but NASDAQ didn't. That's also sus to me. So look, at the time, say, okay, ES ran these highs right here, and then it started to come down. NASDAQ fell short of running those highs before it came down. ES, by the way, is the S&P 500, guys, if you're not familiar with futures. So you want to look at the NASDAQ and the S&P 500 at the same time a lot, because usually when they're doing different things, it's an indication that something's about to change over. So as you can see, we were bullish the whole day so far. Remember, the higher time frame already told me I'm looking for lower prices today. So yes, it looks beautiful in the 15-second, and it's 9:46 a.m. and we've only been bullish so far, so it's so easy to get convinced. But you can't forget the true direction of price action today is supposed to be bearish. That's why it's important to do your higher time frame analysis. So I'm not surprised to see order flow starts to switch over right here. I'm not surprised at all. So anyways, discount back to premium, no delivery to all time to previous highs, right? No delivery to previous highs, and we break down with a strong red candle, creating a bearish fair value gap. I took my chances on shorts here because it's a low risk entry. If I'm getting in shorts here, one, I do not expect this fair value gap to get revisited right here. I don't want that to get revisited. That's one. But if it happened to get revisited, I would really want to see the lower half of it hold. So look at what my stop loss is really. My stop loss is, if I'm getting in at the yellow line, which you guys saw that I did in the picture, then my stop loss is based on the lower half of this. Like, bro, I'm risking, this is a 3-point stop loss. I probably would let the whole fair value gap get traded to though, right? So whatever, my stop loss would be what, 6 points? A 6-point stop on NASDAQ is so small. And if you can't handle a 6-point stop on NASDAQ, yes, you guessed to you're oversizing your trade. So to me, it's like, if I'm risking 6 points to get us back to these lows for real, right? And even potentially lower, I think that's not too bad of a risk to reward if you ask me. Like, I don't know, maybe you guys feel it's bad, but to me, that's an amazing risk to reward. And so that's why I would always take this trade 10 times out of 10. And even as you see it dropping off, you can see that I needed to talk about the exit. Hold on. You can see as it's dropping off, there was no real reason to sell. But let me tell you why I ended up having to sell. So one thing I don't like as I'm in a price leg, as I'm riding shorts or longs, it doesn't really matter, is when price starts to stagger and it's not making fair value gaps anymore, right? So I'm like, this is really suspect movement. Usually when price moves like this, what ends up happening is, boom, we gonna flash through that area. This is engineering liquidity. I talk to y'all about that all the time. This is engineering liquidity. So that's why I'm watching this thing like a hook. Like for me, I'm selling this the minute we invalidate the first PD array. Because I'm like, man, I'm not about to get caught holding a bag. I already caught an amazing short, right? I got in at this yellow line up top. I'm in this whole trade. Things are good. I'm not about to let them, take me back up here. Even if it's going to drop again, I don't care. Like, I don't, like, no, I can just get back in the trade. There's no need to hold through that personally. So that's why as price is coming down, we make a new low, right? I want to see us continue. This red wick at this moment would be my stop loss because I don't want to see us come back above that red wick. That would be my stop loss at this moment. All right, cool. I don't like that green candle. I definitely don't like this. I thought that was gonna be a green candle. Never mind. All right, so we're still holding, right? Red wick is holding. Cool. Yeah, see, this is bad signs. This is a very bad sign. And then once we clear that red wick, I sold as we were making this green candle. I was, I'm out of here. I know what y'all about to do. See, they actually rallied much stronger than I thought, though. Personally, I thought this rally was going to stay somewhere in this range before coming down, but look what ends up happening. And that's why you got to not ignore your signatures, man. Because thank God I got out right here because, look, they would have came right back to my entry, bro. All of this hard work for nothing. And so that's why, like, I always say, don't marry destination, marry delivery. Don't marry the destination, marry delivery. Because, of course, don't y'all think I wanted to run these lows? I was not trying to use this 5-minute fair value gap twice. No. I think that's also coincidental that it used. I would never trust this again. Like, hey, I will use this 5-minute fair value gap again from all the way over here. No, this is out of context now. I think it's more so coincidental that it bounced there twice. I don't think that was like, that's not a repeatable process. This is the type of stuff people show you in hindsight. Like, see, the 5-minute fair value gap got used twice here, but that's a hindsight type play. In real life, that you would never trust this setup again. If we came into a discount, used this, went straight higher like that, and then broke down this aggressively, try this again on your next trade and see if you get a bounce right here. You're not going to get a bounce right there. It's going to trade past it. So remember, it's a game of probabilities. So there will be minority scenarios such as this. Typically, we would trade past this. So I wouldn't make this a repeatable lesson. Like, oh wow, that 5 minute fair value gap got used twice, man. It was such a strong bounce. Like, no, don't do that. You're gonna get caught up. You're gonna get caught up. So I know it, we started rallying much stronger than I expected, and price goes to the upside. So for me, I'm cash, right? I already made money on the upside. I caught the lows, and then I caught the highs. So basically, this entire V shape, I caught both sides. Beautiful. From the bottom to the top, all of that. Now, for me, I'm cash. I'm not chasing upside. I already told you my analysis was that we're supposed to sweep the yellow line and come back down. So as it's rallying, I'm entertaining the fact that, like, okay, dang, bro, you might be wrong today. Like, you might be wrong, bro. Like, you could be wrong. So just stay cash. Like, there's no need to chase upside. Like, dang, I'm wrong. All right, being buys, being calls. Let's go. Just chill. Wait for a good setup. So we chilling. We chilling at this point. And let's see how that goes. So we chilling at this point. Let's see how that go. Now price starts to, I'm on trading view. Yeah, price starts to stall out. It's starting to get a little staggered. Cool. Now it's breaking down back into the range we just left. I'm like, okay, so for me here, I'm like, this could be just a low probability day where we kind of stay around here for a large part. And so I'm like largely just cash. I don't even want to trade futures. Plus on futures, I already made the money I wanted to make for real. So I'm chilling. But then for me here, let me go to the 5 minute. Always scan time frame. So another thing I want you to take away is never just stay on one time frame. I always have a split screen. So one side of my screen, I'm gonna be in my entry time frame. The other side of my screen is the scanning time frame. The left side of my screen, I'm scanning all time frame. I'm forever going from 30 second, 1 minute, 5 minute, 15 minute, 1 hour, 4 hour. I'm constantly just looking around and making sure everything's intact and my story on price action makes sense. You want to make sure that your story on price action is making a ton of sense. All right, so here we are. We got this 5 minute bullish fair value gap is very important because if we invalidate this, then I start believing in my initial analysis again. Like, okay, well, dang, if we were bullish, there's no reason we should invalidate this one. The lower half of this one specifically. I expect the upper half to get invalidated. The lower half of this, nah. So, I'm my eyes are open. As we kind of trade around here, my eyes are open. But if we invalidate that, oh yeah, I'm getting involved again. So next thing, stupid thing. Hold up. Let me just do the refresh thing. I don't know. Once again, I got connection issues today, everybody. So trading has been acting weird, but just we back. So look, I gotta wait for us to invalidate it first. Yeah, as we invalidate it, I just take puts on options. I didn't want to trade futures. Like, I don't want to overtrade, right? I already made my money on futures. But my options account, I just took puts. And where's my target on these puts? Because now I believe in my analysis all over again. Like, okay, I wasn't wrong. We did sweep those highs to come down. Like, all right, beautiful. It was a weird start for sure, but it goes now. Guess what? Remember these lows we talked about, y'all? These engineered lows, how they engineer this liquidity? Going all the way back through here. Yeah, that's the target. That was the play that we developed from the hourly time frame. Remember? From the hourly, we've been made that as the play for today. So, and where am I looking to take profits? When we get to the area for bounces, the red area, remember? Important area for bounces. I put that out to both communities. So this should be some nice puts going from somewhere up here all the way down in here. That's pretty solid. And so really you could just see eventually it plays out. It played around for a while before it played out, but trading view is just moving kind of slowly. But it gets there. So even let's talk through it as it goes. Like, you can see it's ranging here. What are they doing? They're still baiting you to think this is support level. But then guess what? Price starts really starting to break down here. And you see the fair value gaps as we destroy this area. So all of this movement is for you to continue to think this is a support level. It definitely was. I'm not saying there weren't trade opportunities here. You could take these bounces if you want to. If that's how you want to trade, do your thing. I'm just saying that expect that level to get broken when they engineer it so hard, and especially when you know where the higher time frame is going. So I wouldn't be trusting that for bounces. I'll also be looking for like maybe this type of trade right here makes sense or whatever. But cool. When we get in here and then we flash up, I got out my trade. This is the area I was looking for. Once I see us invalidate this PD array, I get out my puts, I take profits, and then the day ends. And then let's kind of see what goes on after this. So I think I'm skipping Wednesday and I'm going to Thursday now. Let me make sure. Okay, so Wednesday was a monster day. I know Wednesday was a monster day to the point where I think that's why I didn't even want to go over it, because I think it was kind of just easy. We already knew this would take us to the yellow line, right? That was the plan since Sunday. That was the plan, to come to this yellow line. But I do want to show you guys that, remember, these are all-time highs. So for the fact that price came directly to my target, remember, price has never ever in life been this high before. So 2 days prior telling you that it's gonna come to this exact spot, and then that's where we want to take profits at, and seeing that price rejected so hard after it hit that level and came even lower than this, it came all the way down here. Maybe there's something, just maybe there's something that I know about, just maybe, right? Like, just maybe price is predetermined. Like, maybe it's not just sellers stepped in like everybody wants to tell you. Like, sellers stepped in. Coincidentally, sellers just happened to step in at the exact freaking tick that I told you about on Sunday. Sellers stepped in. What, did a news event drop? You're gonna blame it on the news? Like, oh, some CPI drop? No, what are you gonna talk about? For price to stop on the dime where I told you it was gonna stop on Sunday. Like, come on, bro. It's on recording. Y'all can go back and watch. So price is, what kind of store is this? Thursday. I want to do Thursday New York session. I'm gonna do Thursday New York session. I don't know why it's moving so slow though. What is it? 8. Probably just a connection thing. All right, here we go. What is this? 850. Perfect. All right. So, by the way, so you see the rejection causing much lower prices. That's good. That's beautiful. That's what we want to see. Now, what was the analysis here? Well, the analysis here, if you guys remember, when the previous night, so we're talking about Wednesday night, you guys get a notification on your phones or whatever you keep Discord on at 11 p.m. I'm like, I'm looking for a price to do one of two things. We're either going to bounce right here immediately, or we're going to come to the 50% of this hourly BISI. I did not say the lower half. I did not say the upper half. Many times in this community, you guys have seen me say, yo, price is going to come to the lower half of that, and then it's going to bounce the upper half. And then this time I was very specific, and I told y'all the 50%. So when I talk about precision on fair value gaps and deeper understanding of fair value gaps, this is what I mean. Like, these are the expectations. I did not want it to come to the lower half, and I did not want the upper half. I wanted the exact bounce. So keep that in mind. Let's keep that in mind. Now, what I'm annoyed about myself with is the fact that I even made this one an option. So what I was saying was, this hourly fair value gap, I put that in the community as, this is one option. The second option, not in any order, I was just open to both. The other option I'm open to is this, basically. I wish I didn't even put out the first arrow, because, and my mentees really could confirm it, right? Like, off the BT4 process, strictly off BT4, which is what I get my targets from anyways, which is my strategy that I made up on my own. This is actually the fair value gap that we're concerned with, not the one below it. And I missed that when I was writing that at 11 p.m. I had just taught class too, so I was like, probably just, I don't know, like out of it, I guess. But, you know, like, I should have realized it was this. So once we traded past this, we're automatically going here, automatically. I don't even know why I even looked at this one, but whatever. And you guys can see, by the way, like, as it traded past that, and the important one that I should have showed y'all, notice that it reversed, used the 50% of that on the other side, right? See how it rejected right at the 50% of that, then it traded down. Yeah, that's bearish delivery. That's what we like to see. That's what we like to see. But whatever. So anyways, price opens up. Let's go to Wednesday's PA. Oh, I need to show that. And in case you don't notice, this always helps somebody. In case you don't notice, you can show certain tools on TradingView on whatever time frame you want. So notice that this purple area is an hourly BISI. I'm showing it on the hourly, and right now I'm not showing it on any minute time frame. So I'm going to check minutes under visibility. So let me do that one more time. I'm double clicking on this tool. I'm going over to visibility, and I'm pressing I can check on or off minutes. Look, if I check on or off hours, look what happened. If I press hours, it disappears. Now it's back. Disappears, now it's back. So you could always tell TradingView which time frame you want to see it on. I want to see this on the minutes time frame right now, so I'm gonna go there. And let's continue looking at this. I think this one too. Let me make sure. All right, perfect. All right, anyways, let's keep it going. So prices dropping. Oh, what news event came out? PPI came out on this day, and price flashed up and then down. Cool. So, man, it just starts ranging here, crazy. Like ranging. Yeah, hold on. Yeah, I know it's a connection issue day, but we pushing through it. We pushing through it. Wow, it restarted me. They corny for that. Where is it at? Right here. I probably could talk through this. Well, actually, no, I don't want to talk through it. Let's back test through it. So the market opens up, and you can tell by the 5-minute that it was ranging. It ranged all the way till at least 10 o'clock. So from literally, y'all, from 8:35 to 10 o'clock, you got an hour and a half of staying right in place. Look at the 1-minute version of it. Look at the 1 minute. Think about how many people blew the account in here. So I was barking at my mentees at the time. I was like, y'all better not be trading this. Like, you better recognize the range and stay out of it, because the range was clear, honestly, from like certain signatures that happened in this area. Like it was clear that, okay, we're gonna range here for real. So at this point, you just need to set price alerts and wait for wait for real direction. Now, what's a setup we talk about when it comes to 12402 said in the chat that made him fall asleep at his desk. Yeah, I bet this is what put anybody to sleep right here. So, what's a major setup we've talked about many times regarding consolidation? The AMD setup, right? So as we accumulate, you expect them to manipulate you to the wrong side. That's the M. And then they're going to distribute to the side they want to go to. So that was my expectation, and I wrote that during this chop. I put that in my mentorship channel, and I said AMD into the 50%, and then we're gonna rally after that. Now, here's what was annoying, right? They didn't actually do the 50% here. They did the 50% later that day. Well, we'll get to that. So the price starts to break down, but here's how we know that it's not a real breakdown. Meaning, here's how we know we're not actually bearish. When we leave consolidation, so let's look at these lows. Didn't I tell y'all? When we leave consolidation, we want to leave it with what? Somebody write in the chat, right? Somebody write in the chat. When we leave consolidation, we want to leave it with fair value gaps. Yep, thank you. I got 3 mentees in a row that answered that. That's good. That's what's up. So fair value gaps. So when we leave this range without fair value gaps, that's like, to me, that's a telltale sign that, yo, this ain't a real. It's not a real break. This is the manipulation side. And I had a question before that. I was like, yo, but Rel, what if we do leave it with a fair value gap? But then we trade back above it. I was like, yeah, then that's another signal that you're in the wrong direction. It's gonna stay above it now. Most likely, it might use it on the other side, but either way, you're now gonna be bullish. So no matter what, the entire play is based on whatever fair value gap gets left on the break, right? So we're focused on that now. Once again, for me to snipe the bottom, I was only gonna snipe the bottom if it touched the white line, but they being annoying, right? So they didn't actually touch the white line. But what did happen was, let's see, price starts to break up. Boom. This is where I get involved in my trade, because we're coming back into this consolidation. All right. I told you guys coming back into, I already know this is an AMD setup. And simultaneously, also, I'm very much entertaining something from my phase two knowledge. So a lot of people think I only trade SMC. No, I trade two strategies at once, and so I use them as confluence for each other. But the other strategy I know is kind of having me think that, yeah, nah, that's probably going to remain as the low for different reasons. Now, we push up. Once again, I'm already in the trade. My trade is based on price holding these PD arrays, meaning these bullish PD arrays, right? You got a fair value gap, you got another fair value gap. Things are looking good, and we want to take out these highs, but more specifically, not just taking out consolidation highs. How about taking out these highs up here, right? Some people call them data highs. I'm not a big data high type of trader, but maybe you guys have heard of it. When some news releases come and they put a high in the market and they go down, for example, you may want to target those highs. I mean, that played out today for sure, but that's not really my reason for getting for having my profit taken up here. For me, I was looking at the 15-minute time frame when it comes to taking profits up here. Like I didn't care if they were data highs. Simply put, the 15-minute told me we're gonna run these highs. I don't it, strictly on the 15. I don't care about it being a data high. But if you trade that, then yeah, those are also the highs at 8:30. So meaning, remember, PPI, which is a news report that came out at 8:30. So by data highs, they mean off the news report what highs were put into the market. Those highs right there. So some people target those. All right. So anyways, price rallies. We in the trade. As long as trade view starts acting slow, but it's a little bit of a stagger move. But I'm trusting where price is supposed to go. I was open to selling if we lost this red candle right here. If you can see where my mouse is at, this red candle is where I will be open to selling because we left the area, right? So I wanna make sure this red candle holds. And for me, why am I saying that? It has to do with me wanting to see at least 3 PD arrays hold. Because for me, I don't really believe in reversals unless I see it's situational, but like basically, if you're in the right direction, let me rephrase that. If you're in the right direction, you shouldn't see 3 PD arrays get invalidated. Put it like that. So what are those 3 PD arrays for me? And I know it's so small, but just you gotta like follow me. 1 would be this red candle. 2 would be this baby fair value gap in here that price already rallied off of. You see how I hit the 50% of it and rallied? Yes, those are signatures I pay attention to. So I see the fact that we hit the 50% of that and rallied. So for us to come back down, invalidate red candle, invalidate fair value gap. The last candle I'm looking at is indeed this red candle again. So for me, I'm already long. I was long since down here. I'm like, I'm gonna still hold my. I know what a 15-minute told me we coming up here. Remember, the 15-minute told me we coming up here. We haven't gotten there yet, meaning the objective has not been hit yet. So price is kind of like staggering and stuff, and it's being annoying. But literally, y'all, as long as price does not invalidate this red candle, I am holding my trade until we get to the destination, which we just got there. So that's why that was my that's why I hold that trade like that. Cool. Now, something I put in the community when price is over here. Where is that actually? What I said to them, man. You said, right? I told you I was 15-minute, right? So 15-minute target hit is a certain type of target. That's why I scribbled that out. But just hoping for extension. I was hoping we'll go past it, but no. And then I told them, but it could be turbulence around 742.50-ish. Now that's the phase 2 algo level I was bringing up, and the only reason I'm even bringing it up is just to once again open your mind to the fact that price is predetermined, and open your mind up to the fact that not everything is strictly SMC, right? So when it comes to smart money concepts, which is what I mainly trade, that's my number one. If I were looking at this level, 21,742.50, and somebody told me based on my smart money knowledge that your price is gonna reject here and come back down, I wouldn't really see why. I'd be like, yo, why do you say that? I think in hindsight, it's easy to say, oh, price is gonna sweep this wick. Okay, in hindsight, it's easy to say that, but why would price sweep that wick versus sweep this wick, or sweep this wick, or why wouldn't price just run these highs up here? So it's very easy to say stuff in hindsight, and that's why a telltale sign to test somebody's knowledge is can they say it before it happens, not just after it happens, right? Before it happens. That's why that's the slogan of this whole community. We call it before it happens here, and that's why I show that every single week. Everything is said beforehand, and then you watch it play out. Like, okay, so a person must know something if he's not. I'm not psychic. I wish it's not that so real. I hate it's not that so real. What you know about that, man? I watched every episode when I was a kid. Shout out Raven. But anywho, like it's not. It ain't that. Like no, it's just a certain knowledge. Is all I'm getting at. So my point is with SMC, there's nothing telling us to really go short at this spot, but there's more out there. There's more knowledge out there. Yeah, real life. David said these things I'm teaching is real life cheat codes. That's a graduate right there in my mentorship. That's so real might be a thing. We might have to produce that. But yeah, so price. You guys can just see how This thing, this stupid thing. TradingView is so dirty today. Filthy TradingView. You can see how it played. So once it comes there, you see it ends up sending price all the way back to the downside. And that was the day, right? It was a really largely a rangy day. Wasn't much to talk about. I want to highlight this trade though, real quick. Let me back this up. I'll just show you. So that's how the phase two level played out. Like price never went above there, it came back down, and then where did it go? The 50% of the hourly BISI. I know y'all did not forget that we wanted price to come to the 50% of the hourly BISI, right? I know y'all didn't forget that. Like, don't tell me you got lost in the sauce and forgot that this is really where price is supposed to go at. Once price got there, we'll see how it plays out. But I want to highlight this quick play for you. So, and I'm not highlighting it for me. I'm highlighting it for my mentee. So shout out Marcus. We call him Marcus Maker. We call him Marcus Maker because before it happened, right? And mind you, let me give you guys a quick background on this. I was done trading on my funders, right? Besides one last fund that I wanted to get my profit target on. I'm like, damn, I want to hit my daily goal on this funding because I got multiples. I'm like, I want to hit my last one and then I could be done for the day. And price was just being annoying, right? Like you could kind of tell it was kind of staggering. I'm like, man, price being annoying, bro. It's getting late. Like it's like 12 something. I'm still in the charts. I wanted to go do some other things that day. Like, man, but the Marks is like, yo, like I'm looking to go long at this BISI down here. It was on a 5 minute, but it's the same thing as this 1 minute, same area. And so I was like, you know what? I agree with the analysis, first of all, but like I just love the fact that like my mentees is calling it out. So then I ended up taking that entry, right? Like I took the play and then I hit the target I wanted to hit. I was good, honestly, with this. So, you know, you see right after we hit the 5 minute bid, see it teased it right here on the left side. You can see it teased it, but it didn't hit it yet. Once it actually touched it, then I was willing to go long, especially seeing the fair value gap come out of it on the 30-second. Oh, y'all forgot that gem. Let's show y'all. Let me show y'all right quick, because I think you guys are gonna remember what confirmation could look like. Let me show you what confirmation could look like for you. So don't forget, if you have a 5 minute PD array, if I could find it, hold up, where are we at? 12:42 Thursday. This is the play? No, that's the outlaw. Yeah, this is the play, isn't it? No, it's this one. My bad. This one right here. Okay, so we touched the area right here, right? We touched the area, and then we start picking up. What's the first thing that happened? We made a 30-second bullish fair value gap right here. Did it get traded back to? No. I like that. I'm already in the play, by the way, somewhere down here. If you guys saw the screenshot, I'm already in the play. But then after that, we make another fair value gap. Now I'm like, oh, this play about to go crazy. Like, Marcus, you did your thing. Shout out Marcus, real. Definitely sniped it because I was like, yo, thank God. And then it went, and then I was good, bro. I sold inside this consolidation. And thank God, because then it started breaking down. But then it came back to what? This discount fair value gap. Then it rallied to the phase two algo level. Phase two algo, it would not lose this phase two algo level for the most part. And then price broke down. And then it eventually goes to where we said price would go in the first place. The 50% of the hourly BISI. Boom. Now we about to wrap up the week for real by just simply showing a couple things. I'm not going to be in the micro time frames no more, but let me just clean this up real quick because I hate a noisy chart. Lord knows I hate a noisy chart. Or if bounces. All right, so let me just reset this. All right, so once again, hourly BISI 50%. You see price gapped up. See, I peep how once we got there, price gapped up for the next day of trading. Look at the next day of trading. We gapped up after hitting the 50%. That's exactly what we wanted to see, bro. That's exactly what we was looking for. And then in class, which the recording, I already posted a clip inside of the free community. I'm not going to play the clip, but if you want, go into the channel and see. In my class, this is exactly what I drew, bar for bar. Like, I said, yo, price is going to go like this. I landed my arrow, literally went right here. I said, price going to do this. That's literally what I drew. And then y'all see how price played out. Why did I say that? Why did I know this would happen? Because I was looking at this hourly gap, and I was looking at the 50% of the hourly gap that was created, right? The 50% of this hourly gap that was created. That's what I wanted price to bounce on. Why is that? You have to know that not every gap is expected to get filled immediately. But if we're bullish, especially, I'm not looking for the whole gap to get filled immediately. Remember, we came into a discount here, and then we gapped up. A gap up shows what? Real bullish sentiment, real bullish order flow. I don't want us to fill out this whole gap for what? That's a bad sign to me. No, I want us to leave a portion of it open. Yes, we could address it real quick, but only address half of it. But we're going to these highs. And then last but not least, right before market open, I said I'm looking for price to come back to the gap that we made last night. And without even going into intraday price action too much, you can see that what we did was we came right back to the gap from last night, and then the day ended. And that's the whole week. So although when you kind of zoom out and look at the week, it was, kind of a rangy week largely, besides what Wednesday was really nice. You can see that it was really like we sniped this thing up and down, like to the tick type vibe across multiple different avenues. And that's what we like to do, man. Trading is fun when you know what you're looking at. When you kind of just feel like you're gambling out there, trading ain't as fun. But when you know what's supposed to happen, it makes it so much more fun. And remember, we're not perfect, but we right very often. We are correct very often. Put it like that. So now that's like last week's gems, and now we're gonna do the next part of class, which should be shorter. It's gonna be shorter. It's not gonna be too long, but let's do the next part of class where we talk about what's expected going forward. So now that we went through this, I could finally clean my chart up. I hate all the markups, man. I don't need any of this no more. All of this is now irrelevant to me, all of it. I'll probably keep the first target thing there though. Yeah, I need to see this hourly busy for now, and that's all I need, I think. I thought I deleted this alert. I ain't seen you delete this alert. Am I bugging? I don't know. Anyways, we don't need this either. And then let's kind of talk about what's expected next week. I agree. Tiffany said in the chat, anybody out there says that they're perfect in this trading journey is a lie, and I would not take any trading advice from that person. I fully agree. If somebody tell you they perfect, I remember I heard a trader say, "Oh, I haven't taken a loss in 2 months and 3." I was like, yeah, okay. Yeah, okay. And then, lo and behold, it turns out that person wasn't credible. So just be careful who you listening to or talk. So this is DXY here. We're gonna go through a bunch of tickets, but first, what we always do, we gotta check the weather report. So, what's the weather report, my people? David said, back talk gets you real close to perfect, dog. We try, man, as much as we can, right? As much as we can, we do our best. But through the flaws, there's beauty in the flaws, anyways. So, what's the weather report? Let's do a weather report. Monday, PMI. Tuesday, retail sales. Both of those events are not bad, and they could cause some movement in the market, right? They're not bad. They're decent events. But really, the main event this week is its FOMC week, y'all. Jerome Powell is taking the podium. My boy Papa Powell. Sometimes we got beef. Sometimes we homies. We're going to see how we feel in December when it comes to bro. But Wednesday, he's talking. So usually, if he's talking on Wednesday, Monday and Tuesday could be somewhat rangy. And then Wednesday, he causes us to break a range. And Thursday and Friday tend to follow through on that. But the thing with Thursday and Friday is we got GDP second revisions. And we got PCE on Friday, which is the preferred inflation gauge of the Fed. So what I mean by that is, I know a lot of people talk about CPI, but the Fed tends to look at PCE a little bit more than CPI. The only thing I will say, though, is in this time period, especially December, I don't have real high expectations on these news events because I largely think the market is going to stay calm, not go too high, not go too low until I think January is when we're going to start seeing some major moves, especially around the inauguration time. That's what I'm really anticipating. So although we have actually some decent news events, you got PCE, FOMC, retail sales, PMI. Like, it looks like a real nice week. GDP, and honestly, like a fire week. I ain't gonna lie. It's just the fact that it's December where I'm kind of telling everybody like, yo, just be careful, right? Like, I don't have the greatest expectations, but at least we know Wednesday is the main event. I think Thursday and Friday could follow through. So fire range week, right? Right. It looks like a great week to literally do this, y'all. It looks like a great week to go like this, honestly. Real talk, yo. It might just be that. So please be prepared for that. All right, now DXY. What was our draw on DXY? We talked about last week this sweep. So you can see that this is Friday's candle. We meet on when? Sunday, right? So in class, we had seen this candle already. And we said, well, I said that I don't think we're going to run these lows. I think this is going to be a sweep and we're going to run these highs next. Why did I like those highs? What could you pick up from that analysis? The engineering of this quote unquote double top or this resistance level, right? I told y'all they set this up to take it later. So all you gotta do is notice when is bullish, when is the order flow flipping bullish, and then those resistance levels become targets. So that's kind of what I looked at there. You see it played out, and then once we hit that target, we kind of just largely been ranging, but I still expect probably continuation higher because if you can see this purple area is a weekly BISI. That weekly BISI is important for higher prices on the dollar. I told y'all that. So I know some people are new here. We've been sniping the dollar up and down. We called the bottom of it. We called the top of it so far. And now we're pretty much looking at what's happening next. So if we're going to continue higher, I said this BISI is extremely important for continuation higher. And it seems that so far it's working out. But we'll see. Do I still expect it to go higher? Yes, I do. Do I expect it to go higher right now? I don't know about that. It's December. So here's what I can see. I can see this. I can literally see this for December. And then January will probably take us farther. That's how I see it. If we go now, we go now. But I'm strictly talking about a timing thing. I actually just got a reminder in the chat about the chart debate. Thank you, the person that DM'd me about the chart debate. Yeah, I usually do the chart debate before I talk about next week. So let's do the chart debate real quick. I appreciate that reminder because I know people is waiting on that. So let's go chart debate right quick, man. All right, so to the Discord. Let's do the chart. Let's see how y'all rocking with the chart debate, man. So you see the answers so far. Most people think arrow 2. You got a few people that think arrow 1 and a few people that think arrow 3. But man, arrow 2 is the most popular answer. Even on my Instagram, I posted this, and arrow 2 is the most popular answer. And so let's see if you guys are correct about this. So this is the picture. If you haven't answered it, go ahead and answer it right now. If you're watching this on YouTube, by the way, you can have access to this entire community if you go to the link in the description box right now and click that free link. All right, now here is you got arrow 1, like I said, is basically using this fair value up to go higher. Arrow 2 is filling out this gap to go higher. Arrow 3 is taking out this whole area. Let's see. So right now, these are the answers. We only had 4 people pick arrow 3 and arrow 1. I want to see what my mentees are thinking on this one. Let's see. Mentees, we got an even split between arrow 2 and arrow 3. So if you remember last week, my mentees all agreed on line 1, and they were correct. So like last week, the week before that as well, you guys may remember, like the mentees, they've been all on the same page, and they like, yo, it's going here, and they were correct. This week, half of my mentees are wrong, and half of them are right. It's not arrow 1, by the way. It's not arrow 1. It is either arrow 2 or arrow 3. All right. Now I will say, oh wow, some mentee just broke the split. Some mentee just added it, and they go on line 3. Interesting. Okay. So I'm gonna say this though. Like, what was I about to say? Oh my gosh, what was I about to say? I kind of forgot what I was gonna say. But dang, I forgot what I was gonna say. Whatever. Either way, it's one of those. So everyone is wrong. The answer is, so today I'm drinking Aquafina water. Let's try this now. So basically, like, I'm I'm gonna give you the answer. Right? I just want to plug the water. Like I know before I was drinking smart water. Today it's Aquafina Fresh. It's a decent water. It has like good benefits. Like it says purified by reverse osmosis. So I think that's actually something you should look into is like osmosis. Everybody, we should probably do a Google search. Let me teach a class on osmosis real quick. Hold on, let me actually make. I'll give y'all the answer in there. Actually, matter of fact, we just do the chalk debate. Matter of fact, if y'all cool with that, like we can get into it, I guess, or whatever. I know people want the answer or whatever. Some of y'all so impatient. Like, geez, very low class brand. I must say that's crazy. Like. Yo, whatever, son. Let me say the answer. So the answer here is arrow tree. So whoever broke the tie on the men's side, shout out you, because yes, the answer is arrow tree. Oh, I remember what I was gonna say now. I was gonna say that in my mentorship group, I have a lot of freshmen. Now, not to call out my freshmen, but to be fair, they haven't learned any of these lessons yet that can let them know that the answer is arrow tree. So I'm gonna get, I'm gonna hold my freshmen. They got an excuse. Anybody that already graduated though, I'm gonna be barking at child in class tomorrow, low key, because y'all should know this is arrow tree. I ain't gonna lie. But for my freshmen, I think there's gonna be a disparity in answers going forward for some of the semester because my freshmen, they just got here. They don't know any lessons yet. But my mentees that been here, y'all should know this is arrow tree. Like, come on. Why would we bounce? Why would this be the low? This gap. Like, why would this gap be the low for real? In context of the market health. Like, you gotta think about health, right? We talk about health a lot. Just think about health and objectives. That's really what I can say to it. Yeah, this charger was a good one. Yeah, now we got I got man. I'm gonna be really getting to y'all tomorrow, but I'm gonna move on for now. For now, so arrow tree one. Okay, so yes, we already spoke about DXY. Nothing really to say here. Let's move to the 2-year real quick. I'm gonna try to fly through these tickets real quick so I could like get y'all out of here. I don't want to keep y'all way too long today. We talked about a lot already. Like last week, we wanted price to. We talked about price coming into this weekly SIBI and rejecting it, and so it played out so far. So far, so good. Nice little rejection, really to the tick, right? Really nice rejection. And I want to see some continuation here. I think this is a very crucial area though. This little area right here is very crucial for what's coming next on the 2-year. What I could see happening is a reaction here, not a delivery higher though. I could see this happening. And then, like I said, maybe sometime in January, I think it's gonna go lower because I still am bearish on this ticker, largely on the 2-year, but I can see us consolidating right now between this weekly SIBI and this daily like BSC / gap. If it just goes down immediately, then that's amazing. We would love to see that. That's great. But I'm just saying, like, I don't anticipate too much trend going through the end of the year. Is all I'm trying to tell y'all. Now, Forex, man, like largely the same analysis that I've had. On the euro, we wanted to see if we could continue to reject this area to go lower. It went lower, but you can see that the movement is range-esque. You can see there's no fair value gaps with a nasty drop. So everything is playing out that we talked about. Yes, we rejected the area, yes, but look at the nature of the movement. Not that fun. Not that fun. Same thing with GDP. Same thing with GBP. British pound. The British pound. It rejected the SEBI, came down. This is all the stuff we were talking about. We talked about using the lower half of this SEBI actually. So this is nice. It's just, is it gonna deliver lower? We'll see, man. It depends what the dollar want to do. But then again, it is FOMC week. FOMC does tend to move Forex. It does tend to move Forex. So I just remembered it is FOMC week. There may be some continuation. So I do think the dollar is gonna continue higher. Like I said, we'll just see if it wants to do it this week or some weeks from now. But I think if we don't range, we're going higher on the dollar, which means we'll be going lower on the British pound, lower on euro. Here is New Zealand dollar, lower on this as well. This one is already delivering. We want to lower prices. It's doing just that. Things are going well there. You can see it range for a long time. If we leave a range, what we want to leave it with, a fair value gap, right? So any upside this week, I want it to be short-lived. Like almost as if I hope we put the high in already. I know the market just opened an hour and a half ago, but I hope we put the high in already and we just keep going lower right now, because I want to leave this range with a fair value. I don't really want price coming up too high on here. So, I kind of just want this rejection to hold, but we will see. We will see what happens here on this ticker. Yeah, like if it's gonna, man, if anything, I wouldn't mind like maybe even just a quick sweep of this or something, but really I want this to stay bearish. But I'm definitely managing my expectations on Forex for the time being. USD, Swiss franc. Okay, this is a good visual for fair value guys for you to learn from. And remember, even though you might not trade Forex, like I mainly trade futures, right? But it's still, I like going through all these price action things because there's still things to learn from it. So remember how I told y'all back in some watch list a few weeks ago that if we're gonna be bullish on this ticker, it's gonna have to use this fair value gap to go higher. That's why I wrote last chance for bulls. And you can see that it traded way under that fair value gap. But I want you guys to remember that for a fair value gap to be considered valid, as long as the bodies are holding it, it's still valid. And so that doesn't mean it's easy to trade this, no. But once the day closed and you see like, oh wow, we closed back in the fair value gap, your antenna should go up and say, oh, well, maybe we actually might still be bullish. Like, because it closed up into here for a reason. It's not an accident. And you can see that like it's really been delivering ever since. It's still holding that area, and simultaneously, it was a weekly BISI, right? It was a weekly BISI. Really, whether you look at it on this end or the end above it, it's a weekly BISI. The bottom half right here, there's a BISI, and the top half, there's a BISI as well, that bodies were able to hold on the weekly time frame. So if you viewed this with a weekly glass, with your weekly glasses on, it was still valid for bullishness. If you viewed it with your daily glasses on, it was still valid for bullishness. And so that's why it continues to push, which coincides with our bullish dollar. And you can see that man, when price was down here, if y'all remember, when price was down here, we've been targeting this blue area. Minor target too. I think it could go higher. So you see it's playing out so far. Definitely playing out so far, and we want to see if it continues to deliver for us. And last but not least on Forex is USD JPY. So there was a monthly BISI we were eyeing, right? Price tapped to this monthly BISI. If we sweep monthly lows how we did, let's actually put a yellow line there. Let's do that real quick. Hold up. Let's look at this. So the lows of November, look what price did. This green candle opened up, swept the lows in November, right? I know how to read candlesticks, right? We opened up down here at the bottom of this green rectangle. We traded down, swept the lows of November, and then we pushed higher and higher and higher. So where do you think I'm expecting price to draw into? The highs of November on the monthly time frame. So that's what I'm looking for next. I mean, I'm already bullish on them, but if we're going to sweep these lows and push up like this, I expect continuation. And it kind of coincides with the weekly now, right? You can see the weekly, we have this fair value gap coming out. We tap into a monthly fair value gap and create a weekly fair value gap. That's amazing. We like to see that. Well, it hasn't been developed yet. Obviously, this candle just opened up. My fault. Let me just say that. This candle just opened up, but I want to see a fair value gap. So if anything, let's highlight this area and scale down to the daily now and see areas we don't want to return to. It's like for me, seeing that there's no fair value gaps here, I want us to stay bullish right now. I don't want price to come back in here for real. I want us to kind of like do exactly what we did so far. Price opened up and it's trading higher, and I want to see a continuation through this yellow line. I don't want a retracement first before going higher. No. I know I lost some people on that. Saying one more quick time. Looking at the weekly, I want a bullish fair value gap, right? That means that this candle can't trade down and touch the high of this wick. So the candle we have right now cannot turn around and touch this candle to the left, right? So meaning I need us to just continue right now. Like right now, just keep going up. Plus, when I look at the daily time frame, it's not like I see any PD arrays that I like that could kind of help us stay above really. There's no PD arrays that I like. So for right now, that's telling me that, hey, if my monthly analysis is correct, we're probably just going to trade higher right now. And that's how I look at it. We got a volume imbalance right here, and I just expect more more upside. And let me just double check the 4 hour. Like, man, I give it room to, maybe tap into this 4 hour busy. You know what I mean? But other than that, like I said, I'm just looking for higher prices. And so I think this should stay bullish from where it's currently at largely. All right. So let's go to crypto right quick. Bitcoin continues to push. Wow, we broke Bitcoin at 106,533 while we on class. We like that. I see you, Bitcoin. You're not playing today. You're not playing today. Bitcoin's heading to our target. I still believe in that target. This target I gave you guys since what? Early summer. Early summer. We talked about 95,760 first. Second target is 122,520. And I told all my friends, cause my friends be hitting the chat sometimes, but my non-trader friends, they be like, yo, Bitcoin hit 100K. I'm like, yo, literally, stop updating the chat until it breaks 122, because none of that is a surprise to me. Like 106 is not a surprise. 110 won't be a surprise. 115 will not be a surprise. I will only be surprised to see Bitcoin like really take off much farther than 122. Like when you start going 125, 130 and stuff, I'd be like, oh, okay, it's really overextending its stay. But what I largely can see is like, I could see Bitcoin coming here and topping out. It's very early to say that, but I'm not really surprised at any Bitcoin price until it at least breaks 122,520 personally. During order consolidation, like I'm still bullish. When it was consolidated here, I had said that Bitcoin could potentially do this. If you guys remember that, it didn't even go that low. Like it just retraced barely and kept going higher. So hey, man, do your thing. Actually, let me delete those while they're here, because it didn't even retrace for real. It just kept going. So I was like, all right, man, do your thing. Like I didn't even need you to. It's not even retracing like that, which is also shows a lot of strength. Like I told you guys about what real strong price legs look like. When something doesn't retrace, right? But instead it just goes sideways and continues, that shows real strength. So Bitcoin tends to do that a lot on its bullish runs. If you guys remember, what is it down here? What was it? I think it was this rally. I don't know if y'all remember my analysis back here, but for whoever been with me for they've been with me for a minute. We've been sniping Bitcoin up and down really accurately for a long time now, including this drop and then pop calling the bounce here and everything. And when price was stolen here, I was saying, yo, the fact that Bitcoin tends to like rally, go sideways, and then continue shows a lot of strength. And you can see after this rally and continuation, it went here again. Then what do we do? We consolidated. We didn't really retrace like that. We consolidated. It's clearer on the weekly too. Right? You can see it on the weekly time frame. We pushed, it didn't really come down. It really just stayed in the same spot largely, and then we're continuing again. That shows real strength in the ticker, and so it's pushing and looking to see it head to 122. It just took a little breather right quick, and we out of here. So that's the coin. My mentees have been talking about trading Bitcoin futures on Top Step actually. Literally just last week I inquired about that. I have not traded Bitcoin futures on Top Step, no. But my mentee literally was just talking about that last week, and I was like, yo, I gotta look into that. So I will be looking into that more. All right, back to futures. We almost done. Last section. So NASDAQ expectations. Now NASDAQ is not in the prettiest price action right now, because after touching our hourly busy at the 50% we wanted it to, I want to see extension. I don't want to see us run these previous highs and then come back. And I'm talking about if I'm bullish like that, right? So I did call out on Friday that we were going to return back down here. So no, that didn't throw me off. I'm just telling you guys that shows me the mood of the market. Like, yes, I expected us to come back down how we did, but it just told me a lot about the market we're trading. So what's the analysis altogether? I wouldn't be surprised to see a kind of a range in here, unfortunately. But here's where I get like short-term bearish. I get short-term bearish if we lose the same area we bounced at last week that I called the bounce on. This same area, if we lose that 50% of the hourly busy, especially with a fair value gap. Y'all missed the detail. Especially with a fair value gap, then I like price having a pretty nice retracement. I'm not saying it's a whole reversal, the bear market starting, like let's relax. Just saying I think it'll probably end up running like last week's lows. Lose 50% of this, I think we run last week's lows, and we might actually go into that fair value I was telling you about before from December 9th, I think. Yeah, no, December 2nd. December 2nd. All right, so that's kind of my downside plan right there. I'm looking at how we trade with the 50% of that hourly busy. If we don't lose that, then I stay bullish. Anything above there, I remain bullish, and you just wait for clean price action. And I would continue looking at 22,299 as a potential destination on the upside. But so a lot will depend on this. I think that there's a chance that we could actually go lower though in the short term. Like you see these lows right here. Remember I talked to you guys about, for example, them higher lows. Put a low in. This low is higher than the previous low. These lows are higher than their previous lows. This area is interesting to me, and I feel like we're gonna end up taking that back. But I wouldn't chase it unless order flow is showing you that it's showing you it wants to go for that, and then it may continue filling this gap because at least on the 5 minute time frame, for example, the gap ain't really filled in until it gets to like right there. So I know it's kind of playing around. It's probably messing with people's account and stuff. That's why I'm not saying it's a high probability area, but I could definitely see a return lower before anything else. Even if it returns here and then goes higher, that's possible too. But I could see a return lower. I'm not married to it. I'm not, you know what I mean? Not like it's definitely gonna do that because we're in a range and anything can happen in this range. But would not be surprised at all to see a return lower. And yeah, so you guys know I get like short-term bearish under this. Other than that, I'm bullish, and I know you guys see like, oh, but what about the remaining part of the fair value gap, or what about this fair value gap down here? I'm just not concerned with those for real. Like I'm just not concerned with those. I think price would trade under here. If it gets down here, it's probably gonna trade under here once again, especially if it loses these lows with a fair value gap. Very important. All right, now ES, you can see that we engineered lows right here. Like this drop did not take the previous lows from Tuesday. Tuesday tapped in here. Hold on, let me see NASDAQ for a second. Oh no, Tuesday lows is all the way over here. Yeah, they were on completely different pages. NASDAQ and ES are on completely different pages, man. Like, yeah, ES. I know a lot of people are frustrated with ES's delivery this past week. I could see why, right? Like, NASDAQ was making some pretty nice movements up and down. ES was just kind of playing with people for real, right? They didn't really do too much. Yeah, so I mean, I don't really trade S&P 500, but I do use it for the divergence thing we talk about. Here you can see, man, this is the daily chart. Yeah, I see why y'all was mad at the S&P 500 last week. This is dirt. This is dirt. Y'all didn't really have much to deal with. These are targets that I have on the upside that I still remain on. I don't. If you're bullish for real, you don't want to see price invalidate, especially the 50% of this red candle. So if we're gonna remain, so for me, I get like short-term bearish on ES. If on the daily chart we lose the 50% of this red candle, that's when I get like largely bearish on ES. Once again, not major reversal, just some short-term bearishness, and I would target price coming back into the lowest body right here. Right, that's how I would see ES play now. If not, and we keep bouncing here, then I'm targeting these targets up top. All right, YM, which is the Dow Jones. Come on, we almost done. I need a little more connection. We almost done. YM Dow Jones. YM Dow Jones. It could bounce in this fair value gap right here that I'm pointing to on the daily chart. That's one thing that it could bounce. If it doesn't bounce there, then nah. Let me see. Like this one is tricky, and once again, I hate the fact that all the three indices are kind of on different pages. I left this here to show you guys that my all-time high target on the Dow did not hit, by the way, because I'm no longer using this target based on how price delivered. So let me actually say that. This is a projection I gave you guys on Dow Jones where I said, I expect Dow to use the 50% of this BISI. See how we used it? We were good so far. It pushed, it pushed, it pushed. We were correct so far. But my target on the upside for you guys was this yellow line. That was the target I had for y'all at these all-time highs. Remember, we've never been here before. it didn't actually deliver. It fell short, right? It fell short. So now, based on how short it fell, meaning it really, I needed it to hold this area for me to stay bullish. Once it lost this area, I was like, oh, never mind. So I will delete that right now. I'm no longer looking at that. And now that it's kind of this deep into this drop, here's a couple things I noticed. On this drop, it's largely lacking fair value gaps. Even look at it on the 4 hour. This type of drop, I'm not a fan of it, and I don't really believe in it like that. So that's why I'm definitely eyeing this fair value gap to take us higher potentially, right? That's one thing I'm eyeing. And if not, I am interested in this red candle taking us higher. I am interested in it. I will say that. And if it's gonna hit that red candle though, to be fair with you, actually no, I'm interested in the whole red candle. Let me say that. So that was tricky. I will use confirmation based on the fact that this is a daily PD array, meaning a daily fair value gap and a daily. Technically, all of these red candles makes up your order block, because I don't ever want to say nothing incorrect on here. Make sure y'all know order block is not just the last candle. Whoever teaches you that does not know order blocks. Whoever teaches you order block is one candle all the time does not know order blocks. I'm gonna say that one more time. Whoever teaches you order block is just one candle all the time does not know order blocks. It could be one candle, but it's not always just one candle. I'll say that right now. So whoever teaches you that does not know order block. And I'm saying I don't like to talk down on people, but I also don't like when people are irresponsible teachers, because you're making people lose money and stuff. So I don't like that. For the definition of order block, technically it would be the consecutive reds here. So it's really all of these technically. But where would I expect my reaction right now? I'm expecting my reaction if we're gonna go higher from it. If we're gonna go higher, I would expect my reaction right in this area right now. All right. And you said nobody knows because they all say that. I know, that's why the industry is very frustrating for me. Very frustrating. But I guess that's also why people tend to, once they kind of get exposed to stuff I teach, they pretty much stay here. They stay here because they see the teaching is different. And I call it before it happens. So they're like, okay, clearly he knows what he's talking about. So yeah, now what was I saying with that? Yeah, so but in this my fault. In this scenario, I am looking at the upper half of this red candle. In this scenario, I'm looking at the upper half of that red candle to go higher. Now, if we lose the entire red candle and start trading lower, then that's when I get bearish on the Dow Jones. Okay, so you got a bull case, you got a bear case. I'm looking for reactions in this fair value gap. I'll give you the top half of this bottom red candle. I'll give it to you. But after that, if we lose the 50% of this BTC, pretty much is kind of what I'm saying. Yeah, I think Dow is going to make us move down into these lows. Okay. So you got a bullish plan, you got a bearish plan. My expectation is the bullish plan. Okay. That's my expectation, but I'm prepared for both. The Russell right now, it's funny. They look almost the same, don't they? This looks like the same scenario. And so my expectations are actually the same projections. I'm looking at this fair value gap right here. Potentially, if not, I'll give you room for this whole green candle real talk before it bounce. I'll give you room for this. But if it's not those, it should be taking out these equal lows, these relative equal lows. All right. So bull case is this general area taking us higher into this white line. This area taking us higher into the white line. If not, then we are expected to protect. I think we'll run this yellow line. All right. Bullish case, bearish case. That's the Russell. Finishing up with CL. Still nothing I'm interested in. You can see why. Yes, there's nothing I'm interested in on CL. Gold. All right, gold, man. Gold is an interesting case. I want to speak on this for a little bit. Whoever's new here, every circle you see on the screen is something that we called out beforehand, including these all-time high targets. You see, once it hit it, huge retracement. This rejection, we called this as well. So gold, we were sniping it up and down. And then we said that after this big red day right here, after this huge red day, I said gold is going to consolidate. It just consolidated for like 10 straight days after that. And then it pushed out. All right, now, when it pushed out, was I surprised? No. Go back in the recording. I told you guys, when it breaks, I think it's going to break where? To the upside. So when it finally broke out, that shouldn't surprise anybody in here, because we said it was going to break to the upside. Now, here's what's annoying about gold. Now that you got the background, let's talk about what's happening next. I would want this fair value gap to hold, right, for us to run those all-time highs. I would prefer that. It didn't hold. Now we're coming back in to this range. So am I bearish now? No, I'm actually still not bearish on the gold. What I can see happening is deeper retracement than I want. Still kind of some BS going on. I think largely gold may actually either still stay in this general area or just but eventually I think we see all-time highs again from it. So like for gold, I think we see, put it like this, I think we see all-time highs before we see lower than this red candle. So it might play in here a little while, but like I think all-time highs come first before any type of real lows hit the market. That's what I think is gonna happen on gold. And if I'm wrong, I'm wrong. But I my rationale largely is if the goal was for gold to have a huge like drop off, right? Like this. It got to our target. If you guys remember, coming back to this consolidation was the target. Once it got here, if it really wanted to go lower, it would have rejected right here and went lower right there. That's what would have happened. Typically, all this is probabilities. So once it came up here first, I was like, okay, even though this might play around with people, eventually it's gonna end up going higher. So I still hold on to that analysis. The fact that it retraced this high, kind of, because I just look at it like, why would market makers give us the same entry that they got? Market makers got it up here. Why would they give us the same entry as them? Largely, that's how I see it. So to me, that's why, because that's not actually the high of the move. Gold may have higher before it ever drops off again. So that's why I hold on to that analysis right there. The delivery is not fun. I don't like this deep retracer or nothing, but I still think all-time highs is next. So I guess tradable wise, you know you could watch this inefficiency. We're in a volume imbalance slash a bullish fair value gap. You could watch this for upside. If it trades under it, I would